Okay, let's take a look at what's in front of us here real quick. We have an algorithm that we use here at H&J to help make our trades, and we're running about 8 out of 10 trades are good for us. So that's a really, really good ratio. Okay, we don't get every trade right, but we're getting about 80 or 90% of our trades are profitable. And that's pretty amazing. The algorithm's been working really good for us. Occasionally would come down to 75%, about 3 out of 4 trades, or 7.5 out of 10 trades, whatever. 75% if we're in a choppy market. Okay. So let's take a look about what is in this algorithm. And now I'm not going to give you the specifics of the algorithm because that's private. Obviously, I'm not going to give that away. But I want to talk a little bit about what's in it. And I think just real quick, let me tell you a little bit about myself. My name is Jerry. I'm a software developer, hopefully soon retired. I've been programming computers for about 35 years. And about the last 25 years, I've pretty much been mostly Microsoft technologies. So that's just a little bit about me. And I also have an affinity for studying mathematics. Okay, so let's take a look at what's in this algorithm. What is in this H&J algorithm? So here's some of the things that are in it. Now, some of these are pretty obvious and they're used in the market, and a lot of people are using them, obviously. These aren't necessarily in any order of importance, but so let me just go down the list, okay? So number 1 is momentum, and that's pretty obvious. Very common. A lot of people trade momentum, and that's part of our algorithm. We definitely use momentum in our algorithm. Okay, volatility, number 2 there. If you don't have enough volatility, then the market's just trading sideways, and it's hard to make any money. Now there are ways to profit in a sideways moving market. Options comes to mind. There's some different strategies that can be used. Okay. Number 3, trend. Now, number 3 has a lot to do with number 1 and number 2, but we definitely look at trend, which way is the market moving. Okay. Number 4, filters. Now, this is custom filters that I've personally created to help filter out some noise. Okay. And number 5, we're actually using advanced trigonometry in this algorithm. Now, that isn't necessarily new, but I know not a lot of people are using trigonometry specifically in their trading. Now they may draw some lines on a bar chart, but I'm not talking about that. Okay, we're specifically talking about using trigonometry and the calculations of trigonometry to go along inside the algorithm itself. Okay, and that is one of the things in the algorithm that I think is a little bit different. And it definitely is. I'm not going to say that alone obviously doesn't help us make good trades, but it definitely made a big difference, okay? Now, the things that are not specifically in the algorithm, but we still employ them to help make good trades, number 6 is calculus, okay? And calculus is really just born out of the summation of, infinitesimally small differences, okay? For those that are familiar with mathematics, today they call that, integrals and derivatives, okay? And then physics, which is basically just the study of the physical world around us. You could think of Sir Isaac Newton. Believe it or not, classical physics or classical mechanics do have play a part in how we go about viewing trading. It may seem strange, but you'd be surprised how relevant it really is. Okay, and lastly, I just want to mention real quick, we use a service called from AskSlim.com, number 8 there. So that's Steve Miller. We're not being paid by Steve. I'm not mentioning his site because, we're getting paid or getting any kind of, there's no partnership going on between us, H&J and Ask Slim. But I would be amiss if I didn't mention him because we do actually use their service. Now, he has a very unique way of looking at the market. Him and his team use psychoanalysis. I think he's been doing this for over 40 years, something like that. I think he was on the trade floor the commodities trade floor at one point in Chicago, which is where they're stationed out of. But anyway, I just want to mention them real quick because we do use their cycle analysis, and he has a really good service. If you haven't checked it out, go check it out. Okay, we're going to be starting our own subscription-based service in 2019. For now, we're going to be doing some free videos, and when we get ready to do subscription, we'll let you guys know. Okay, so you have a little bit about who I am, software developer for 35 years. You have at least a general idea of what's in our algorithm. And I also want to mention that, in case you didn't see the Ask Slim and the physics and the calculus, there it is. That's me, software developer, 35 years. And at the very bottom here, we've actually back tested. Okay, let me just lower the camera here a little bit. We've actually back tested this. So we didn't just throw this up there and start making trades and hope it all worked out. Okay. We trade primarily futures, but not only futures. We do trade some stock and some other. Occasionally, the stocks and options do come into play if we believe it's going to be very profitable or just something we need to do. But we have back tested this on the Russell 2000 futures, and we also back tested on the oil futures. Now, lately we've been trading the oil futures, specifically the /QM. We like that particular, those futures contracts, the /QM, because a little bit lower volatility than /CL, and also we happen to really like the margin on there is a little bit more friendly for us. Okay. All right. Now I'm gonna just hang with me. I'm gonna switch over to the chart, and I'm gonna show you the Russell 2000 and show you the signals. The buy and sell signals that this algorithm right here is generating. Okay, well, we just got done looking at the algorithm, what goes into the algorithm. So now we're going to take just a quick look at the signals that we get from the algorithm on the chart that's in front of you. This is the TD Ameritrade Thinkorswim platform. Okay, so I'm not going to take too much time. I want the video to be too long. I know everybody's got things to do in life. So let's take a quick look. The last candlestick here was for the Friday that just passed. That would be December 4th, 2018. I'm sorry, December 7th, 2018. But going back, let's see, 1, 2, 3 days before that, on December 4th, we had a sell signal, and what a killer, awesome sell signal. Look at that sell signal. I mean, it speaks for itself. Boom. Now, we tend, at H&J, we tend to trade on the close. I know a lot of people probably find that weird, but we have our reasons for doing it, and it should be obvious that it's working because look at this. Bango. Okay, we're looking at the Russell E-mini Russell 2000 Index futures. Okay, $5 a tick, so $50 a point. The close here is 1484, and the low over here is 1438. You might not catch a low, but you might catch it about 1440. So from 84 to 40, I mean, crazy. Is that crazy or what? 84 to 40. I mean, you do the math. That's 44 points, not ticks. 44 points. Okay? Yeah. $50 a point. You do the math. What's 44 times 50? That's just nuts. Absolutely nuts. You go ahead and do the math. You do your 44 times 5, okay? Yeah, big money right there in a matter of just 4 days, guys and gals. And if you had 2 contracts, I mean, you know, go take a vacation, right? Go to Hawaii. So you can see that this algorithm is really kicking it. It's kicking it hard. Like I said earlier, we're like 8 out of 10 on, when we have volatile markets like this. We're just doing really well. Okay, here's another one. I mean, it speaks for itself. I'm not going to calculate profit and loss. Okay, you all can figure it out. Massive profit here. Even if you're doing a one lot, one contract trade. Just massive. Okay. Now here's a sell signal that there was only a little bit of money in it. And we may or may not have made this trade. But the signal's still decent. Yeah, we have a red candlestick here and a green one here. But there was a little bit of money in this, not a whole lot. Okay. 1465. And the low here was 63. Now, you're not going to catch the low, but you might have got a point out of this. So, you know, it was a trade we may or may not have made. There's a whole lot
more than, we don't just blindly follow the signals that are on the screen here, okay? But even if we did blindly follow it, this is about a 1 point profit. So would have been basically, call it break even between these two. Okay, looking at this one, a little bit of money in that. 27 up to 30, just about 3 points in one day. Okay, even if you're doing one lot trade, 150 bucks, two lots, 300 bucks in one day, from one day to the next. Okay, this signal speaks for itself, right? I mean, do I really have to say anything about this? This is just, I mean, just absolutely monstrous. 1551 down to 1501. That's close to close. I mean, the low is even better. Okay, you may not catch the exact low because that's gonna be really hard to do, but I'll give it 2 or 3 points. I know I'm gonna catch that. That's like 1497. Okay, so 1551 to 1497. I mean, this is just. I mean, you know, we're not gonna sit here and brag about profit and loss and start spouting out numbers like we're some kind of millionaires. We're just two traders right now, but we're making really good money doing it. Okay. And that buy signal speaks for itself too. So you may ask, well, gee, that's a big long time. All 1, 2, 3, 4, 5, 6, 7, 8, 9 days, 10 days not to have a signal. Well, why would you need another signal between here and there? You're just letting it roll, right? Just let it roll. Just smile every day right here because there's nothing to change. Just hold your position. You know, for you traders out there, there's plenty of other signals, momentum, stochastic, MACD. You know, you just put them on your chart. I mean, you know when to get out. Okay. Again, we're not going to give you advice on when to get in and out. We're just telling you this is where we get in, and it's obvious where we got out, and we would place another trade right away, right? Okay. So you decide. Do you want to follow along on this? Okay, so the video is getting kind of long. I'm going to stop right there. This is pretty much a significant volatile market to make some really good money on. There's some choppy market stuff up here that we would be a little bit more careful about where we make our trades. Okay. You see some orange, some yellow, and green. Our orange is basically the same as our red, but we still might make the trade. Yellows, basically be cautious. But we don't just blindly follow these signals. Okay, they're really good guidelines. They steer us in the right direction, even in choppy markets. 3 sell signals, we knew something was coming there. The little buyback signals we may ignore, or we may jump in, but we don't always. We know we're in a downtrend here, so the buyback, we don't always follow the signals going against the trend. Okay, I know the video is getting long, so I'm gonna stop right there. Hope everybody, guys and gals, found this valuable. 2019, we're thinking about coming out with subscription-based service. We'll let you know when we do it. For now, enjoy the free videos, and this is Jerry from H&J, and we'll talk to you again real soon. Bye-bye.